Hello, folks. It is Value After Hours. It's 10:30 a.m. on the West Coast, 1:30 p.m. East Coast. It turns out it's 6:30 p.m. UTC, 6:30 a.m. Australian Eastern Standard Time. How are you, fellas?
Living the dream.
I'm fantastic.
Does it feel like the markets are a little bit quiet at the moment? Is that just me?
I think it's just you.
It does seem like there's actually a fair amount, a little bit more dispersion in price movements, at least the stuff that I kind of keep an eye on. Like, I don't know, maybe a little bit bigger moves than the last few years. Not like anything going in one direction particularly, but maybe a little bit bigger moves. Very anecdotal.
Looks like the 10-year keeps on creeping up. It was coming up on 1.3%, which is, lower than where it was 12 months ago, but more than double where it was at the bottom last year. It's up a lot.
Is that good or bad?
I have no idea, honestly. I think that there's one argument that higher interest rates are better for value, and so when the 10-year kind of creeps up a bit, value looks a little bit perkier.
I like perky.
Yeah, but I don't know. Like Cliff Asness, like that article that his colleagues wrote, they couldn't find any relationship between the two. So I don't know if it's meaningful or not. Kind of watching it though, it does seem to be creeping up a lot, at an accelerating rate, whatever that means.
Does that mean refinance your house now if you can?
Yeah, lock in those low rates. I don't know. We were about to get negative rates, so don't do that.
I was waiting for negative.
What are we talking about today, gents? There's a lot going on. I just said it was quiet. Now I'm saying there's a lot going on.
Well, you need to market the podcast. You can't say, hey, everybody should just go away.
Slow news
makes
day.
No sense. Yeah.
Looks like energy might be sort of slowly rotating back into prime time.
Yeah, I don't know. I think I'm going to talk about morality and investing. That's what I think I'm going to talk about. That's what I've been thinking about a little bit.
Should be able to just sneak that one into a quick 15-minute segment.
Nah, it's not that tough.
Yeah, 5 minutes. I have, for veggies, given that it's February and Black History Month, I have a little thing prepared on Henrietta Lacks, which I don't know if you guys know who that is, but it'll be a fun conversation maybe.
That sounds good.
I don't know her.
You will.
I'm going to be talking about a few things. So there's a little energy crisis going on or a little heating crisis going on in Texas. So I mentioned that to Jake, and he sent me through this huge document on energy, which I've read. So now I'm a tourist, but I don't really know what I think about it. But there's a reasonable case, I think, to be made for getting long some energy assets, and probably from like a year ago. But we'll see.
You just lost like all 10 of the listeners. We're down to 3.
Oh, let's do this one last, just so we can back out before we get
What's
there.
up to the 10? It's been a long time since we've given them a shout out.
The Baker's Dozen.
The OG 10, which is basically Ian Castle and 9 bots.
Who wants to take it away?
Who's going?
Let's get JT.
Exhilarating podcast.
Yeah, I'll go first because actually, the end of mine will dovetail in with Bill's, so this will be good. It's like we planned it, even though there was
perfect
zero planning. May be a surprise.
There was a lot of.
All right, so 1951, this black woman, mother of 5. Named Henrietta Lacks visits Johns Hopkins Hospital. And at that time, Johns Hopkins was one of the only places that would do kind of pro bono work for under-moneyed population. She presents with vaginal bleeding, and turns out she has a large malignant tumor on her cervix, and they take some samples of her cells and take them to the laboratory. And at that time, you didn't really have to consent to that at all. They just kind of took your cells and did whatever they wanted with them in a scientific purpose. And there were doctors there working at the time who were trying to figure cells out, really, and like, how do they work? And typically, up until that point, all the cells that they would take would die within, a day or two. And this woman had something kind of magical about her cells, in that they doubled every 20 to 24 hours. And they were just like this incredibly fertile, fecund, like sampling. And so they ended up taking it and like culturing her cells, and they're now called HELA cells, HELA, to be for Henrietta Lacks, the first two letters of her name. And so all HELA cells came from this woman from 1951, and they've used them to study, like, it was a launch pad for cellular research. So 1952, they developed the polio vaccine using her cells. 1954, the first cells were cloned, were her cells. 1960, they went up in a Soviet satellite. 1984, they used to study HIV. 1989, the telomeres was discovered using her cells. 1993, they studied tuberculosis using her cells. And like 2005, like nanotechnology is used using these HELA cells. So there's like 11,000 patents that are based on technologies and medical research that is, really pivots off of the HELA cell. And incredibly, like, her family didn't know anything about it until like much, much later, because they just took these cells. Like, you didn't need consent, never financially compensated for taking these cells. And it's like kind of ends up into a weird bioethics kind of question about, like, if they just scrape cells off of you, are those still yours? Are they your property, or is that the property of science or the state, or like, how's that work? There have been different court cases that have tried to make rulings on that. Anyway, 2017, Oprah actually did a movie about Henrietta Lacks, and actually she played her daughter, who was trying to like get some recognition for the fact, like, this huge scientific contribution that this poor black woman made to science, and was kind of never really talked about. So, to get into the tortured analogy part of this that everyone is so fond of, I think we studied her cells because they were such an outlier, right? Like, all the other cells that they took from people ended up dying. And I think, looking at that kind of DNA, it doesn't mean that you can replicate it, and just like, if you injected it into somebody, it doesn't mean that like those cells then would take over, like the body would mount some kind of defense against it. I think the similar thing can kind of be said about corporate culture. And so, like, we look at these corporate cultures that we are incredibly fertile and have these very, very rare properties to them, and then we think that, oh, well, just like, let's just inject the slide deck from that company into this company, and now we're going to have a whole new culture. And I think it's like very misguided. I think actually culture is very, very hard to change. Guys care to chime in there before I keep going?
Yeah, I do. I'm not sure that that's underappreciated by the market, because a lot of the companies that have a really good culture trade at a premium, and I'd argue for a good reason.
Or do they trade at a premium because their returns are good, and we, after the fact, say that's because they've got a good culture?
I know you're saying it's double counting.
I'm wondering, asking.
No, he's wondering.
Well, I think one's an output of the other. I mean, I don't think that, like, I mean, Berkshire is not endowed with good returns. That's actually a pretty hard business to run, right? I mean, insurance underwriting is nothing that's inherently great, and then using the float to then recycle that capital into other businesses. I would say that's a pretty complex entity.
You take
value growth.
Yeah, but dude, that's just one.
But you take See's Candy. So See's Candy you buy for $27 million. By like 2011, it's thrown off $1 billion, which even if you were sticking that back into like the SPY, you look pretty smart.
I agree that there are some good businesses out there that are so good that anyone can run them. But like even Coke was destroyed through bad capital allocation at one point. I don't think that you can decouple a business from the culture and people running it. I think it's really hard.
So where do you guys look for assessing corporate culture?
Well, I'm going to give you the answer is I look in the financial statements.
Okay.
I want to see
particular part of it that's
I want to see what they're earning on their assets, how conservatively they're geared. Look in the proxy, see how they're incentivizing themselves. See what they do when the stock gets cheap. Do they buy it back? See how they spend their stock. What's the attitude of management to the shareholders? Are they trying to concentrate intrinsic value further in each share, or are they doing something else? Is it like a General Electric type situation where they're managing to the quarter, and the return on equity's falling away all the time, just over leveraging? That kind of tells you just about everything you need to know, I think. And I think sometimes when you listen to what management says, they don't get to those positions unless they're pretty charismatic. They're very, very persuasive. I've never really met one who I haven't liked, I don't think.
Yeah, I think that there's some argument to be made there. Yeah, I mean, the one that I'm looking at right now, I'm looking at the proxy statements. I like that they're heavily incentivized by stock. I like that they're not getting paid through options. I like that they don't get stock. They basically have a negligible salary. Like that stuff I like. I prefer to look at where the money is and the incentives are than like some of the other stuff. But, I do read a lot of earnings calls, and I do try to decode how people think about things. I mean, like TransDigm, whenever somebody's pulled in front of the government, I like to watch what they say and do. I feel like that's sort of a unique position. Unfortunately, the government blows it sometimes, like with big tech. But when it's not like a political stunt and it's just actually like truly digging into what the business is and how people think about that, I like that. Like AB InBev, I sort of like the antitrust stuff. I thought that there were some clues there. So I don't know. It's kind of a mosaic, but I would say how they're paid is number one.
Great answers, both of you. You both get gold stars for today. Yeah, I think you're exactly right. Like I think the incentives, especially in the definitive proxy 14A, tells you so much. Like, if you have a CEO of especially like an insurance or a bank or something, where if they are compensated on revenue, expect to have stupid underwriting, right? Like Andy Grove, the former CEO of Intel, talked in High Output Management, which is a great read, by the way, if you ever get a chance. He talked about how every single indicator is what he called them, but that's basically like incentive comp structure. Every indicator has to have a counter indicator, like a countermeasure, because none of them can exist on their own and be unalloyed good. There's always some negative way that it can be taken, and you have to have a balancing. Yeah, exactly. There's a trade-off that you have to recognize by having a countermeasure. Yeah, and I mean, I think we've talked about this. I would say too, like the board of directors, if it is you have a board that has, they're paying them $200,000 a year, and that is like a material amount of income and lifestyle for that board member, don't expect them to push back on anything, right? Like they're basically indentured servants at that point. And then the last thing, we've talked about this a little bit before, and this is a very, very broad generalization, but in general, I think about anything above gross margin talks about business quality, and below gross margin in the income statement gets at a little bit more management quality. And these are obviously, management has influence over the entire income statement, but in general, if you want to be known as a good business person, get into a good business, like that argument. And then on the other side of that, like, sort of a 3G mentality of costs are like fingernails and they always need to be looked to be trimmed, right? They always want to keep growing. So anyway,
I thought you were going to say you need to rip them out, something like that.
Yeah. No, Toby, come on.
Trimmed is much better.
Family friendly. So anyway, I think looking for the DNA and not expecting extreme outlier DNA in all of the businesses that you're looking at, or that they can pull some kind of like culture miracle out of the hat if they're kind of a regular cell, regular DNA. That's maybe something we can learn from Henrietta Lacks in that scientific situation.
Is there any way that someone like a Buffett can come in and change the corporate culture by emphasizing, incentives and trying to change that direction?
Buffett's like the last guy to ever want to do that.
I mean, look, like TransDigm, I think that's what they do, right? They take over companies that are under optimized by their standards, and they come in and they optimize them. I think that a lot of the serial acquirers sort of implement cultural changes. I think it would be hard not to. So, I mean, there's obviously a level of decentralization also, but I think there's got to be some cultural implementation. It's hard, man. When I was at the bank, we took over M&I. We were BMO Harris, and we took over M&I. Man, what a pain in the ass that was. I bet it's not going on now, but like I bet it was still going on 2 years ago. I mean, I bet it took 5 years to get those organizations going, sort of swimming in the same stream. And I'm sure somebody in a model said, 2 years, we'll have all the synergies done and everything will be great. Right?
The PE associate.
2 years, you don't even have the systems tied up yet, especially in a bank. What a pain.
Oof. I can only imagine.
What about when Buffett comes back to Geico?
I mean, I don't know. I don't know what he actually did like there, right? I think some of the activist stuff, he sort of made people cut some fat. Buffalo News, I think he gave people sort of like the leeway to be them and said like, we're going to go win this. I'm sure every situation's different. But now that he focuses on businesses that are running well, I don't know that that's really what you need to do, right? You just need to preserve the incentive system more than anything.
I bet he tunes up the incentive systems a little bit. Because, I mean, he talks about, I would love to see the entire Berkshire incentive system book across all the different companies and what he picks for each, like what metrics he uses to incentivize all of his CEOs. That would be endlessly fascinating. Unfortunately, I've never seen much about that. He's talked a little bit here and there, but never in details.
Talks about charging them an appropriate. Yeah, well, that's what I was thinking. It's a little bit of a state secret, but he talks about charging the different businesses get different rates on they have different hurdle rates, right? So that's not one size fits all.
Yeah. I mean, I think it's hard to argue that he didn't at least turn around the perception of the culture at Sullimar Brothers, right? So I'm sure some of that was true. I can't all just be like perception, and a bunch of people got fired. So, hard to decouple the marketing myth from reality, but I suspect he's done a lot in his day.
I've got one of our readers, one of our listeners pointed out that thanks P pointed out that he's bought the Japanese trading houses that he's bought are all natural gas trading they have big natural gas trading enterprises, and in addition to Dominion Energy, so he's got this big natural gas bet on at the moment, which so this is slightly my topic, but the natural gas has kind of rocketed over the last short period of time here, but also since Q3 last year, it's taken off. I think it was at its highest ever. It's on a tiny little demand spike, like 3.5%. Did he get in there just because he saw that was cheap? Is that one of the reasons why he's gone after those Japanese trading houses? Are they slowly fixing their they've had, terrible returns on equity for a long time, but is that all slowly being fixed?
I don't know. I mean, I think it's a lot of those are very heavy industry as well, with big fixed costs that may or may not do well with inflation. So I don't know if that's a little bit of the bet there. I don't know. I mean, Japan in general has been cheap off and on for the last 30 years. Probably more on.
When did you say that natural gas has been rallying since?
Last year. This the article that Jake sent me through was like Q3 2020, and I think they had it at, it was like all-time highs at Q3 2020.
No, I don't. That can't be all-time highs. I mean, it was at like $8-10 a MMCF. Like,
I mean, I'm looking at the front month commodity contract now, and in 2016 it looks like it was $3.36 per whatever unit this is quoted in, and now it's at 307. I mean, for a while, I don't know, with all the fracking and stuff, there was just so much damn gas coming out of the ground that they just couldn't get the price up. So now that some of that fracking has sort of gotten shut off, I think that the price can sort of go up. But I don't know what I'm talking about. I do know that I see a head and shoulders, though. Shout out to the chartist.
Bull flag. I got no idea.
Yeah, actually, dude, it looks like it's a head and shoulders that turned into a bull flag and a breakout. Whew, that is some sexy looking stuff.
You can't miss.
Gonna rip. You want to pull back to support here, though, folks.
Healthy pullbacks.
Anyway, that's right. Some consolidation. I have no idea about natural gas at all. I think that what he saw in the Old Dominion stuff is, I think that the shout out to Brad, one of our listeners. Like, there just is not much appetite, I think, to put into pipeline assets anymore. So I think that he probably saw roughly a 10% yield on what is probably a pretty stable asset and isn't going to require a whole lot of cash maintenance capex. He's probably got some amortization tax benefit, put it in the energy company and get some more tax advantages out of that. And I think the math worked, and he doesn't think that there's huge risk of new capital flooding the industry, is how I would assess it. But I don't know what the hell that guy's thinking. He's a savant on me.
Huge amounts of capital flowing into the industry. Not right now.
No, I said there aren't huge
amounts, that's what I mean. I'm agreeing.
Yeah. I think it's
especially if ESG continues. Like, are we building another pipeline in our lifetimes?
I don't know. Shout out to MMP and EPD.
Maybe.
You want to take it away, Bill?
Yeah, I don't know. I mean, I guess you could. It can all go into morality, right? But I sort of tweeted out about Altria, and I'm not like pumping the stock. I don't know. It's interesting. I look at that entity, and as a security, I just think it's cheap. If I had a nice cup, Jake. I was at that summit. Yeah, what up? I guess, like, for me, I'm just looking at it from a financial standpoint, and I guess that, like, if I took a complete donut on that and could remove cigarettes from society, that would be a fine trade. And, like, I could sell that thing tomorrow and not care. This is not some security that I care about or some product that I feel, beholden to. In fact, I'd like to lose money on it because that outcome would be better for society. But, like, I don't really know where you draw the line on this kind of thing. And I think it's really easy for me to say cigarettes. I've gone through this before on this podcast. One, my mom has smoked her whole life. I have hated cigarettes my whole life. I have tried to get her to stop smoking. I will probably lose her to lung cancer. So there's a part of me that says, like, fuck it, I'm going to make some money on this stuff because it's cost me enough as it is. The other side is, like, somebody came into the chat today and he's like, I wouldn't buy pot stocks. Guess what? I like pot a lot. And I think it's better for people than alcohol. And I think it does really interesting things for me. It helps me be present. Some of that's because I've got a mic on a book that says taking charge of adult ADD. So, like, I might be, like, self-medicating a little bit, but, I don't think pot is what some people may. And then you get to booze, and, like, I've seen booze destroy more lives around me than anything. And, some of the greatest investors in the world are out there heralded, and they own Diageo, and they own like all this other stuff that are great businesses, right? Jack Daniels is a great brand. Russo talks about it all the time. Like, Wild Turkey killed my grandfather. I mean, he killed himself with it, but like that dude was drunk all the time. So I just don't know how you like, the guy that got up and said like, how can Berkshire own Coke? I mean, sugar is some pretty bad shit. I don't know where you want to draw the lines. And I guess there's a part of me that's like, how can you even make this argument? Because it's so clear that cigarettes are not a good thing for society. The other part is kind of like, well, if you take that to like its logical conclusion, let's assume everybody just avoided it and the price was like $1 a share. The one guy that went in and bought the security would be super rich. Like, I don't want that outcome either.
Tobacco tontine.
Yeah, like I just don't know, right? What has social media done to politics, right? Like, where do you draw this line? I really don't have the answer. And I'm more having the conversation to think about it out loud rather than say like I know the answer. I really honestly don't know the answer.
Are there any businesses that are just unalloyed good?
I don't know. Like here's one that I thought of. Let's say that what's the fucking OnlyFans. Let's say OnlyFans goes public. Right? I mean, I guarantee you, like whoever buys that SPAC, if they have some warrants, those warrants are going to be worth a lot. Like that business is worth a lot. I mean, I don't know. Does somebody that's ESG say, hey, these people are now in charge of their own porn careers? Or does somebody that's looking about it say, no, porn is inherently bad? Like, I don't know.
Do we have any businesses, any takers on that that are just pure?
Yeah, that's hard, isn't it?
No,
I mean,
no
obviously
questions
Berkshire
asked.
is.
Tesla, naturally.
Tesla, yeah.
There you go.
The children that are mining the materials somewhere
Rare earth.
don't count because you can't see them.
Disney? I don't know how Disney. How does Disney sneak through there? No way. Disney's gross.
Dude, I'll tell you what's gross. You walk around Disney World
That's what
and
I
you
mean. Disney's
cannot.
gross.
Yeah, you can't tell me that it doesn't promote obesity or something. Those buffets
What about
are
like
nasty.
gender conformity? I mean, there's all kinds of.
They're trying to do.
You have to be a princess.
They're trying
where
different
I'm
things.
at with it personally, where I'm at with it is I will not put private market. Like if somebody's trying to raise funds and I'm not for the business, I will not participate in giving a business capital. Some of these more mature businesses, like I just think you're sort of buying a piece of paper and a cash flow stream.
I think about it in terms of
Lawrence Hamtil has framed me up on this.
Like, I think about it in terms of invincibility. So what is going to encourage people to attack you? Doing things that harm people is going to encourage people to attack you. And smoking companies certainly have been attacked along that avenue by two different parties in the past. They've been successfully attacked by governments, and they've been successfully attacked by individuals who've been injured. It would be hard to make the argument now that you don't know that you're being injured. And I think that governments are getting so much tax revenue out there, heavily incentivized to continue that. So you may have solved those two constituencies. You might have found a way to live with them. And so you're not going to be attacked anymore. But in the world as it is at the moment, with people sort of being cancelled for a lot less, you got to think that that's it's an out there kind of thing to be literally handing out the cancer sticks to people. You think that they're not going to take another run at them?
Well, yeah. Well,
Go ahead, Bill.
No, I was going to say, like Buffett is in the past. I'm not going to shout this out because I don't think the person wants attribution. If they want it, I'll give it to them later. But like Buffett in the past has said, like, we'll own a cigarette distributor. We don't want to own the cigarette place, right? Buffett has owned Walmart. Walmart sells a ton of cigarettes. Like, I don't know. Where's the distinction? I have no idea.
Well, the cigarettes could go away.
Where does personal choice and responsibility fit into this conversation?
It fits in the
I don't
1980s.
feel great about owning Ultra.
Okay. That's where I keep going.
It's going away now.
or is it the 1880s or the 1780s?
So
or
the thing is, the difference between Walmart and the cigarette makers is that Walmart can stop selling the cigarettes and it's going to be okay. Cigarette makers stop selling cigarettes. I don't know. It's tougher. I don't know how they get out of that. You got to make the argument that you can sell the patches or sell some other form.
But here, I'll go all law school with you. So they could choose to not sell them, and everything would be okay. So why do they choose to sell them? Why choose to willingly harm society? If it's the answer is because you want profit.
I'm not saying that I'm not talking about the choice that they're currently making as being good or bad. I'm saying that if they're prevented from selling them, the business is still going to be okay.
Yeah.
Whereas if cigarette companies are prevented from selling them, they're gone away.
Yeah, so then you lose your money, but then society's better off. It's not a big position for me. It's just like a small bond slug replacement. I blame the Fed.
But then booze companies have got to be like next cab off the rank. Right?
You like that? You like how I did that? It's
I wouldn't have
not
to
wrong.
own.
If cigarettes go away, like booze companies go next, right? Because
never gonna happen.
In that stream, in that little Twitter exchange that you had, didn't somebody said like some tiny percentage of people buy like half of all alcohol, right? Consume half of all alcohol. It follows
the top decile, dude. The average is like 72 drinks a week of the top decile, and then the ninth decile I think is 15 drinks a week, and then like a surprising amount of people to me don't even drink, but I don't tend to interact with them. But for alcohol, this podcast wouldn't exist, right? We don't get drunk together. I'm not here right now.
That's true.
Yeah.
I don't
know.
You know, I'm a laissez-faire kind of human being. I'm not saying don't do it. I'm just trying to think about the impact on the portfolio. Like I'm trying to be like, where does the attack come from? That's what makes me nervous.
I'm more thinking about it like just from a morality standpoint. I mean, the portfolio risk I kind of get, but it's tiny. I really could care less if it goes to zero.
I mean, the problem
it doesn't matter. Or couldn't. I always say could care less, but like that doesn't make sense. It's couldn't care less.
The problem with all ESG is that we all have different definitions of what's important. There'll be people who'll say that climate change is the single most important cause that we need to deal with right now. And then there'll be other people who say, well, if you make energy too expensive, the knock-on effects to the people who are hurt worst are the poorest. And not just in this country, in other countries around the world. So you have a very delicate trade-off when you're dealing with those problems. And so that's what makes ESG so complicated.
I mean, I'll tell you, for me, like where like my integrity, my line is, like I'm considering interviewing a guy that has a small cap company. I had tracker positions in that company. I sold everything because I was like, I don't even want to fuck with disclosure. I don't want to act like I could be pumping something, like not at small numbers. Like it's just not what I want to get involved in. So like in that instance, I think I'm actually controlling an outcome to a certain extent. And if there's any perception that I'm controlling an outcome, I don't want to have anything to do with it, and I will avoid it. But when it's a $40 billion market cap, or not 40, I'm sorry, it's 70 x Bud, or what am I thinking? I don't know. My math's off. Anyway.
It's going to be tough when you have Buffett on the business brew. What are you going to do
Dude,
with your
the Buff
Berkshire?
Dog could run. This leads to something else that I want to say, because I'm not great with numbers off the top of my head at all. I do know the dividend yield, but I don't know what the market cap is off the top of my head. Yeah,
the dividend yield's 9%.
Yeah. Well, ex-Bud, right? Bud's almost a $10 billion stake. So, yeah, it's an $80 billion company. I apologize for sounding stupid. Anyway.
Can you push this conversation even further to... I feel like there are some people who they just buy companies that they like. They like the product. They like whatever it is. And that's like the number one sort of controlling part of the equation for them. It's not about like, you know, is this am I being compensated for taking this bet? You know? And that's actually probably done better than anybody who's actually thought about like, well, what's my risk and reward? No, I just love this product. And I'm just going to buy it because I love this product.
Any risk calculation.
What do you guys think about that?
Yeah, any risk calculation's been a waste of time. But it doesn't sound like Peter Lynch, like like what's the difference between saying I like this company, I'm going to go buy this stock, and then you turn around and you find support for it in Peter Lynch? He says, yeah, do that. Find the thing you like and buy it. I think he says do some valuation, but he's not.
That's passe.
It's been a waste of time.
Where we're going, we don't need valuation.
Well, I guess that I think that is some of the Motley Fool's, like, what they preach. I think you could do that if you don't do it in a concentrated portfolio out of the gate, and you dollar cost average over time, and you're willing to underperform potentially. But I don't know. I really don't. I don't have a great answer for any of this stuff. It's just something that I've been kicking around, and since I'm so vocal against Robinhood, somebody posed the question to me, and I thought that was a fair question to ask.
That's a good question.
Yeah. What's the difference? So
if you go down that line,
should be like, where can you sleep at night? That's the.
Yeah, I guess that where I draw the distinction is, one is sort of couching itself as helping the poor and giving to the rich by its name, and it's like so clearly not. One is like a wolf in sheep's clothing, and one is a wolf. And I guess that's like, at the end of the day, what I think I draw the distinction. But that could be motivated reasoning. I'm really not sure.
You respect that they're telling the truth about how evil they are rather than disguising how evil they are.
Well, yeah, because the game, like, there's no pretense to the game, right? It's like, this is what it is. And there's always going to be evil in the world. So let's just call it evil and move on.
I got a question up on the board. So what is Altria worse than Facebook?
Well, this is something that I said today to Postmarket. I said, because they came on and they were like, I think like sugary drinks could potentially be, a lot closer cousin to tobacco than you want, right? And I think that they said, like, I'm trying to be somewhat inflammatory, so Costco distributes a bunch of sugary drinks, so isn't that, like, I don't remember their exact tweet, but that's what I said. I said, if you really want to be inflammatory, look at what social media has done to political views and how the polls are huge and the middle is completely eroded. Is that good for society? I'd argue that's a whole lot more harmful than cigarettes at this point, if that causation is really true.
Yeah,
I think it's hard to argue it's not a contributing factor.
We have political diabetes right now.
Yes, idiocracy is truly only a couple of steps away.
VSG points out that cigarette companies are low-fat and vegan.
I don't want to make a joke of it, but I do appreciate that joke.
I mean,
so can I say something unrelated, but it's somewhat similar, and like, I kind of view this audience as my home, so I think that I gotta say it, like, here.
As long as it's inflammatory, then yes.
No, it's not, man. And I did Jim O'Shaughnessy's podcast, and he asked me something about, like, what's next, and I had cited my returns, and I somewhat misspoke, and I just sort of, like, want to get the record clear, because I don't know how they're going to edit it, and I don't have any problem with them or anything like that. I just sort of want to get out in front of this. So, like, I had posted on the internet that I've done 19% for my 3-year and 20% for my 5-year. Last year was 38% in that account. The other account was up like 56. I don't know if I'm a schmuck that got lucky. I'm not trying to stunt on anyone with returns. I know a lot of people.
Slutty PA?
No. These are like the real accounts. The slutty account. I don't know what that account had a volatile year, but I put like 45% of it into Curate, so it ended up pretty okay.
Yeah.
I just want to be honest about, like, how little or confidence I have right now that what I did is repeatable, and I don't want it to be like one of these promoters, and I'm not trying to talk returns after a good year. It just happened to coincide with sort of my account blowing up and me getting a little bit more recognition for things that are somewhat in and somewhat out of my control, and I'm just not trying to be one of these fucking people that I hate. So I wanted to say that to everybody. As I demonstrated with my knowledge of quoting Altria's market cap, I'm not exactly the best with numbers off the top of my head. So anyway, it's my little come clean.
Should we hit the Q&As?
Yeah, hit us with some questions. We've got about 20 minutes to go.
Sorry.
No, 20 minutes is good.
We normally get there a little bit late, but Collimore says dental disease is the biggest disease in the world.
Huh.
So maybe Coke and the other purveyors of sugary water, they're in trouble.
Yeah, it's tough. Like, when they asked Buffett about that, I kind of was like, oh, this is a stupid question. I understand why somebody asked it, you know?
Wayne Hire, ladies, wants you to show the world your abs, Bill.
No, you don't want to see that. It's very fat. You don't want to. I showed it. I put a finger in my belly button and put it on Twitter. It's a disgusting, disgusting sight.
Someone just asked me if I'm losing faith in value. No, not losing faith in value. Have I given that impression? I'm sorry. No, I'm doubling down to the extent that I can.
Last man standing.
If it comes to
Here's
that,
a question. Here's a question for you guys. What if all the inflation fears are just like completely wrong?
in the sense that what are the inflation fears? That inflation's coming.
Yeah, I mean, I think if you look at Bitcoin and you look at all the commodities ripping and all that, like I had a conversation with this dude Nafal Sanala this weekend, and he's pretty far left. I mean, he admits it, and he's advised AOC and stuff like that. So he's on the left, right? But he had me really wondering how much of this is like a short-term supply shock versus in the middle of like structural deflation versus not. And I know this is macro, and if you'd spend a minute on it, it's a minute too much. But I just sort of wonder if this is like one big fake out by the market, because I feel like a lot of people are expecting inflation. Now, obviously, healthcare, education, all the stuff that matters has been inflated, but he would argue those are supply constricted.
We've had a little bit of both, haven't we? We've had some supply destruction because of COVID and all the shutdowns, and we've had a whole lot of money printed and tipped out. And if you have less of one thing and denominated in more of the other thing, sometimes that winds up as inflation. Sometimes I guess they just don't count it, so it doesn't. And if they don't count it, it doesn't happen.
No, well, I guess the answer would be if it's because of COVID and your shortage is COVID related, right? Like lumber tripling in Q3, that should have a natural, like lumber is something that you should be able to bring supply on, right? So it should fix itself.
There's also the money printing side.
Yeah, if enough of the velocity picks up, but so far it's all just gone into the pockets of the rich for the most part. So I don't know that results in inflation, right? You need velocity. Investor
Blogs bought an ad on how, so here you go, his 5 largest positions, are they undervalued? You can click through it and see him talking about it. I'm just kind of impressed by the fact that someone did it.
Ad?
Yeah,
Wait,
just
do
to
we
just to
actually
stick
get
that in.
money from this?
£10.
That's sick.
If it ever breaks even.
I'm not gonna lie, I'd rather hear your best idea, but I do appreciate the ad, in my opinion.
You want to talk about CSU? It seems interesting. They're suspending the dividend. They're going to invest outside software.
Well, they said that they're
not outside of software, but outside of that small VMS.
Okay, I slightly misunderstood that.
Yeah.
I don't know. Like everyone seems to like this idea and think it's like this pivot is a big deal and good for them. I'm not so sure. Like that. What they were doing was working really well, and I think they've kind of run up against, I don't know, like a supply of acquirees. I don't know if that's right or not, because I don't really keep track of that market, but certainly probably the prices have had to have gone up that they've paid, right? And now he's talking about having to participate in auctions for these bigger VMS, and I'm like, last time I checked, that's not really where you get great deals. In an auction format. I don't know. Doesn't seem as like great news to me. I don't know.
So I think it's fair to say we're not the most educated on this name. What I would say is when I said that tweet about, if Mark Leonard wants better shareholders, he can do things like his podcast. The comment that I think was the best back to me is he's not optimizing for external shareholders. He's optimizing for employees. And given how candid he was on that podcast, how candid I think he is in his letters, even though I have said they're not my favorite, they're great letters. And when I have dialed into the annual meeting that I dialed into, I wish I didn't miss one of them. I think this guy, he's thinking this is the way to maximize value, right? And in that letter, what I heard him say is, I used to be opposed to this, and I think that I was wrong. And now that I'm wrong, we're going to lean in heavily to this strategy. And I think if you believe in Mark Leonard, then you want to see him chase the highest return for his capital. And I don't think dividending it out to shareholders with equities at peak valuations relative to history makes the most sense if you think that you can do something better with it. I think it was a phenomenal letter.
Any growing branded home goods furnishing companies running with low leverage coming out with good products and buying back shares? Other than Restoration Hardware looking for other ways to play home wellness.
That's hilarious. That's a funny question.
Restoration Hardware doesn't have
oddly
low
specific.
leverage. There might be one. If you know one, send it to me.
I think there's an interesting one, but I'm going to be buying it, so I will talk about it in about a month.
There you go.
How does value investing perform in stagflation? That's a good question.
Why are we going to stag? Like, what's the underlying thought of no growth? I mean, housing is ripping everywhere. If you believe that high housing prices will stimulate home building, housing is like one of the highest multiplier effect sectors out there. And there's a lot of incentive to build, and there's a huge backlog. I think the economy is going to be fine after this. I don't know what's going to happen to the dollar, and I don't know what's going to happen to sort of the U.S. over the long term or whatever. That the spending makes me nervous, but the actual economy, I think, is pretty primed. Savings rates are through the roof. People are itching to get out. I don't know. I think people are waiting for a shoe to drop that may not drop.
I think that
it feels like it should.
Isn't the inflation argument just that we're not positioned at all for inflation? That if you get any kind of inflation, then that has this violent reordering of where everything is in the market. So we were were we talking about this before we came on? But what do you do if you get inflation? And the old Buffett answer is you want to buy the companies that have the highest return on invested capital, because they're the ones that can reinvest in the business and actually kind of outpace the growing cost of running the business. So in real terms, they can actually grow. But JT, you had a different perspective on that.
Well, I'm not sure I agree with your characterization, actually, of what
I reject
Buffett
the premise
said.
of the question.
Yeah. Well, no, I mean, I'm probably due for a reread of how inflation swindles the equity investor from.
I was talking about one of his
Fortune article
letters
from 1977.
It's a 79 letter when he says he talks about trying to outpace gold, isn't it?
He does say something, I think, in the 1980 letter about from 1964 to 1979, Berkshire did like 20% book value growth, something like that, and was quite pleased. Like, they outperformed the broad market pretty handily. But he could have purchased, I think one share of Berkshire purchased a half an ounce of gold in 1964, and one share of Berkshire purchased a half an ounce of gold in 1979.
Huh.
So
interesting.
Yeah, I think that was what he talked about. And so he said, like, save your patting on the back of us because we basically were flat with gold.
So you just pick the thing that's performed the best, and if you're flat with that, then you haven't done anything.
Well, he holds himself to a higher standard,
evidently,
I guess, than average.
Good for him. But what were your thoughts? You didn't think that you don't like my characterization of what Buffett said might be the most offensive thing that anybody's ever said to me.
Them's fighting words.
No, Jake had said earlier, he said that he thought that some of Jake, talk about Napier's argument, right?
Yeah. I think it has to do with high fixed costs. And if you are in a business that has high fixed costs and doesn't have to replace those assets with new assets, new capital, then your returns on invested capital can explode, right? And we traditionally think of high ROIC businesses as capital light, can't really absorb more capital generally, right? Otherwise, you run into some laws of large numbers that don't make sense. So if the components of what creates that return on capital have to be reinvested continually, even if earning those high returns on capital, the costs may push up just as much. And if you have the fixed cost that is not moving up, the total return then can look quite a bit. And I think they saw this in the 70s where companies with really high fixed costs, they showed blowout earnings because, and granted, this is all nominal, by the way, like this is something to keep, it's important, is that really there's more losers than winners in this inflation world. And it's not generally good for equities. So like, I think everyone thinks like, oh, I'm just going to park in great businesses and I'm protected from inflation. And I'm not convinced that that's necessarily the case.
Oh, I don't think it is, because your discount rate's going to have to move and your duration is super long in those assets. You're going to get a nice little wake-up call, for lack of a better term.
But here's the thing. There's two aspects to that, right? There's what the price is going to do relative to the business. Then there's what the business is going to do over that period of time. Even though we're not even talking in real terms, just talking in nominal terms. I would have thought that, Microsoft in an inflationary world is fine. They just keep on putting up the price of the products and nobody even notices. Like it goes from whatever you pay now, $8. I pay $8.75 a month or something. They just say, guess what? It's $9.50 this month. You're like, all right.
Well, not to mention if you believe that sort of the Zoom culture has enabled a more distributed workforce, there might be an argument to be made that Microsoft's total labor pool is higher, or there is more total supply than maybe they quantity supplied.
They can sell more. They can sell more, is that what you're saying?
Well, there's more people to bid the job out to.
Yeah.
Right. So they, I think, have suffered from wage inflation in an outsized way because they're a tech company and tech companies are paying people a lot of money. Right. So if you can somehow outsource some of that and work remotely, you might actually have a scenario where their costs could
come
go down.
Yeah.
Yeah, that's right.
Yeah.
Whereas
I don't know, though. I mean, we've had
a piece of machinery, you're going to pay more.
What's
made of steel?
Jake, what's an example of a business that's not going to need to replace its assets? That's got the high fixed costs.
Well, Napier gave the example of there's a Bacardi plant in Cuba that was built when Cuba, like, I don't know, 1950s, the heyday, still making Bacardi there, and pretty sure they haven't reinvested much money back in that Bacardi plant in Cuba when there's not a lot of capital flowing into Cuba historically. So, I mean, it totally depends on the asset and, what's the durability of the value created by that asset. Like in technical disruption, I mean, we could even go back to, we've talked before about the 5 sacks of flour, if you remember, like each level of value that's created by something. It's not clear to me. It really takes a lot of teasing apart of every little moving piece of a business to figure out, is this going to be benefited or harmed by inflation?
Complex adaptive system, right? No idea what the changing those inputs is going to do to the outputs.
I thought that sorry, go ahead, Jake.
Well, I was going to say another interesting point they had was a lot of people have blamed high labor costs on unions historically, like especially in the 70s. However, the arrow might go the other direction in that when you are falling behind in your ability to raise the price of your labor to keep up with the costs of food and room and board, that's an impetus to then organize with others who are also falling behind and create a union. So I wouldn't be surprised if we saw more union activity pick up if we actually saw increased inflation.
It's an interesting thought.
Labor couldn't be any further behind capital now, could it? This is about as stretched as it gets.
Yeah. Well, so run that a little bit further, and now what does that do to these record margins when you have interest rate expense perhaps tick up? You have labor cost tick up. You have cost of goods sold potentially tick up. You have taxes potentially tick up. All of those things are kind of coming for margins, I would say, potentially.
But when would you not have said that over the last 6 years?
Well, these things take long. These are like glacial changes. They're not.
Just asking.
That's a fair question. I've said the same thing, and I think Skeletor had a shot at me on Twitter about it, saying that, you know, I'm making all these assumptions. But it just seems to me that when you have every single one of those things lined up as Goldilocks for capital, and then you just start, like, I can see the taxes probably going to go up, interest rates over time probably going to go up, labor's probably going up, like the inputs are going up. It doesn't seem to me that it's that much of a stretch to say, I don't really know how it happens, but probably margins are going to get compressed here, and there's any number of ways that it can happen.
Yeah, I have two thoughts. One, I think it's somewhat interesting that this week on Wealth Track, they had somebody from T. Rowe Price, and they were talking about the new hedge is a long short book, right? So historically, maybe it was a 60-40 allocation, but now you almost need a short book to protect you in a downside because all correlations go to 1. And I don't know if that same thought happens for inflation, sort of like moving rates up, right? Rates go up, bonds should go down, equities should go down with it. I mean, I think. Obviously, assuming all else equal.
Bill, do you know anyone interesting running a long short?
No, I don't have a clue. I have no clue. I don't know anybody that does anything of the sort. The other thing is that conversation that I was having. There's a moment where I was like, "Oh, okay. So if you have inflation, the equity market could take a hit, but if you're actually sending the dollars directly to the people that can spend it, arguably the economy could sort of get going and they could get jobs." I almost think that the left may see that as an outcome and a way to close the wealth gap more than maybe I've appreciated in the past. Whether or not that's misguided, I know it's politics, I get it, but it's just sort of a thought that I had as I was having the conversation.
$25 loaf of bread does not close the wealth gap.
Well, I had some pushbacks too, so I agree with what you're saying, but I almost think that may be part of the thought. But I may not understand the conversation as well as I'd like to. I was just looking at gold. It's done 8% since 2004. At least the GLD ticker has. It's kind of wild.
Was it particularly depressed in 2004? Is that like a local low?
No, it's just as far back as I can get the data right now. 2011, it's basically flat since 11.
Right.
And that's kind of why I'm having the thought. I remember in 11 when like people were clamoring for gold, and the reason I remember it is I was gifted some physical Cougarans, and I fucking top tick that. Shout out to me. Because like these people that I didn't even know were calling me about gold, and I was like, all right, I'll sell you these things. This is crazy. I think I put the proceeds in Caterpillar, which maybe wasn't a great idea, but I don't know. It's better than holding gold, Peter Schiff. Suck it. I'm just playing with you, Peter. I'm glad you listened.
Not anymore. Just got a downvote.
What?
Yeah, we're always.
There's always one.
One more.
Yeah, I can't see one straight off the top of my head, but I just think that I think that the argument for inflation is not so much. I mean, it looks like there are some indications that it's coming, but it's more that we're just not at all positioned for it, right? That if it comes, then there's a violent redistribution of the current natural world order, and then maybe value wins in that. I don't know. Maybe value goes on to suck for another decade, and we all got to learn brand new lessons.
I just don't think that. I mean, eventually it can't. Eventually, the jaws must collapse. I'm just not sure when. Right? That's the hardest part. If anyone figures it out, write us.
There's a lot of speculation in the market right at the moment. There's a lot of little
Yes.
call buying. There's a lot of leverage. There's a lot of, although I'm told that leverage is coincidental, so that's not an indicator. But there's a lot of, I mean, we're closing on 36 on the Cape, which is pretty high. That's well above 29, and we're sort of closing in on 44 as the all-time peak here. Although it got to 100 in China, got to 100 in Japan, so sky's the limit, really. There's no reason why you have to stop there.
Well, I'll stick some crappy earnings numbers into there if you have any kind of margin collapse and watch your Cape explode higher.
Well, we've got a little bit of that over the last year, and so that's started
Yeah.
to permeate, which is probably what's pushed it up a little bit. I don't know. I find
Less than I would have guessed, though, if I'm being honest. Like I was more concerned about that. I feel like we could probably go back and watch shows from
20%
March
off. Yeah.
and been way off on some of those worries.
Yeah.
This game's hard.
It is super tough. All right, folks, that's time. It's been fun chatting.
Thanks, everyone.
We'll see you all next week.